So are rates dropping? Well, they are, and they're not. And they're more not than they are. Well, what does that even mean? Let me explain. So, look, variable rates are dropping because the Bank of Canada keeps reducing their policy interest rate. The key policy interest rate derived from the Bank of Canada is what banks use to set their own prime rates, which then is what your variable rate is set according to. So, that being said, there's a direct correlation. That's why you're seeing reductions. However, variable rates are still technically higher than fixed rate counterparts. So, when you're looking at rate calculators and such, you're not seeing anything lower for the time being. On the fixed side, that's another story. So look above here. It says 3.239. That's the Canada 5-year government bond yield. That's what fixed rate mortgages are tied to. Now you can see since the start of this year, since January 1st, there's been a consistent push upwards, which is disconcerting. And to be fair, we are seeing slight increases like 0.1%, 0.15% to fixed rate mortgage, but it's not a huge amount. Unless you have an enormous mortgage, it's really going to make a very fine, small difference between what you would have paid if you locked in a week ago versus this week. That being said, let's have a look at what's happened in the last 6 months so you can have a better understanding as to maybe why we shouldn't be overly concerned with this recent uptick. Okay, so you can see here, really since, August 1st, 2024, there's been a pretty consistent trend line all the way across. In fact, you'll notice we had a Bank of Canada 5-year bond yield slightly higher than where we are right now, and that was back near the beginning of December. So, should we be overly concerned with this recent uptick? No. Does that mean rates are going to skyrocket in value? No. And odds are it's going to come back to an equilibrium where it's been for a little while now. Now, that being said, as we get more economic data, as the Bank of Canada takes further action in terms of their own policy rate, we could see changes here as well, depending on how investors react to those announcements. However, if you didn't lock in a month ago and you're looking at a rate right now, it might be slightly higher, but it's not significant. If you renew today versus a month ago, it might be slightly higher, but it's not that significant. That being said, if you do need to renew your mortgage this year, you should reach out to a professional like myself, maybe 6 months in advance, and we can create a plan for how to approach the renewal offers you'll get from your current lender, and maybe the trajectory you want to take moving forward when you do renew. Whether you want to stay variable, whether you want to stay fixed, depending on what you currently have. Do you want to switch? What kind of term do you want? These are good questions to ask and things we can review. That being said, hope you have a wonderful day there. Talk soon.